Hey everybody, we are going to talk about one of my favorite stocks in the market right now, and that is PayPal, ticker symbol PYPL, and why I think it could be on the verge of a new phase of growth. Before we dive in, please take a minute and check out the link you see on your screen right now, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So I've called PayPal my favorite stock to buy in 2024, and I stick to that, even though it's at its 52-week high right now, still way down from its peak. I think that the market is severely underestimating the company's long-term potential to increase monetization and its user base. And I love the moves the new management team is making. So let me share my screen real quick. So, as I mentioned, PayPal is near a 52-week high, but it trades for a pretty reasonable valuation of about 15 times earnings. That's for a company with a massive net cash position. It's spending pretty much all of the free cash flow it's making, which is over $5 billion a year on buybacks. It's still down about 75% from its 2021 peak. And as I mentioned, it has a brand new management team, not just the CEO, who is new. Alex Chris joined the business as CEO about almost exactly a year ago. He was a former Intuit executive, and he is the newest member of the executive. I'm sorry, he is the longest tenured member of the executive management team. The entire C-suite, the entire key leadership team is brand new. And there were some pretty impressive hires. I've talked about that in other videos, and they're starting to make some impressive moves that are not reflected in the company's numbers yet. So we'll start. Perhaps, arguably, the biggest announcement they made this year was in May when they announced that they were creating an advertising platform. This could sharply boost the monetization of its existing user base. So the idea is that between PayPal and Venmo, there are over 400 million active users, and PayPal has very, extensive data on how people who use its platform spend money. So advertisers could find this very valuable because they can target messages to people who spend money on products like theirs. So it makes a whole lot of sense to have an advertising platform. It's still in the very early stages. And that was, the big announcement earlier this year was this. But since that time, PayPal has made several key announcements, most of which happened in the past few weeks, that could also pay big dividends in the long run. So just to kind of name the first one, PayPal Fastlane Checkout. This was announced earlier this year, but it officially rolled out to all U.S. businesses in early August. The company's data says that this is a 32% faster way to check out online than their traditional experience, and some of its partners seem to be impressed with the platform. Adyen and Fiserv have already signed on to expand their partnership to offer Fastlane to their U.S. customers. Adyen, in particular, hopes to roll it out worldwide. So that is a pretty promising development. Just recently, on September 5th, they announced PayPal Everywhere. That is the best debit card reward program that I know of, and I cover credit and debit cards for the Motley Fool's sister site, The Ascent, and do a lot of credit and debit card reviews. And it's really rare to find a debit card that offers any type of cashback rewards at all. The Discover cashback debit card is one of the very few that I know of, and that offers a 1% cashback rate. They're promoting this with a very large ad campaign. I'm curious to see where that goes. And they have a big net cash position, so they have the money to do this. They hired Will Ferrell to be kind of the spokesman of this. They're just starting to show ads, so I'm curious to see where that goes. And how this works is the PayPal cashback debit card, it can be used online, in stores, everywhere, which is where the name comes from. It offers a 5% cashback rate on a selected spending category that the user selects, and it is good on up to $1,000 in spending per month. So you can earn up to $50 cash back just by using the PayPal debit card. You don't have to use credit cards if you don't want to. And in addition to that, there are cashback promotional offers. Let's say DoorDash is an example they give. If DoorDash is offering 10% off or 10% cash back for using the PayPal debit card, That stacks on top of that 5% cash back if you chose restaurants or food service or whatever the category may be. So those stack on top of the cash back you already get. Really impressive program. Again, not reflected in the numbers yet, of course. This could have a few different effects. One, it could boost engagement dramatically among PayPal's 420 something million existing users. And it could bring more people into the ecosystem because, like I said, this is probably the most competitive debit card program that exists. Not everyone likes to use credit cards. So this could turn PayPal into almost a checking account replacement in a way for a lot of people. So it could help the business grow on both sides. Finally, and this is the newest one, PayPal and Shopify announced a new expanded partnership. This just happened on September 9th. They announced that they were expanding their partnership, and PayPal is going to become an additional online payment processing option for Shopify payments in the United States. That's very significant because, one, Shopify is huge. As you see there, they had $41 billion of payment volume last quarter. The second quarter is a seasonally slow one. They had more the quarter before that. And in the holiday quarter, it's even more. So figure conservatively, you're talking about Shopify having about $160 billion of payment volume annually. And previously, this partnership only covered France. So the fact that they are rolling this out in the US is a very, very encouraging sign. Again, one of the ways PayPal has continued to increase its revenue and earnings, despite the fact that its user base has been pretty stagnant for a couple of years, is by engaging its most active users and specifically having them, raising the average number of transactions that each user completes every quarter. And this should help it continue to do that, to increase engagement and bring people, more into the PayPal ecosystem. So the key takeaways here: number one, management is being very active. They're taking steps to both improve monetization and grow the user base. The old leadership team essentially just relied on network effects and the growth of e-commerce to continue to propel the business indefinitely. And as the COVID pandemic really kind of subsided, that wasn't an effective strategy anymore. That's why the big management change happened. So this is a refreshing change. Again, some great moves, none of which are reflected in the numbers yet. And it could allow PayPal to effectively enter a brand new phase of growth. I mentioned the stock trades for just about 15 times earnings, despite great margins, great cash flow, and now great growth potential. So I am even more excited about PayPal than I was when it was trading for significantly less at the beginning of this year. It's a stock that I plan to continue building a position in for the foreseeable future, especially as long as the current prices hold. And I'd love to hear what you think. So leave me any comments or questions. I'll do my best to answer any of them individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.